Hello, I am Denise Olson, the Interim Chief Financial Officer for the City of Oxnard. This presentation provides information on the proposed public safety property tax assessment for fiscal year 23-24. This next slide shows the recommendation. A special municipal election was held in 1951, authorized the city to enroll its public safety employees in the California State Employee Retirement System, now known as CalPERS. This obligated the city to pay the annual cost of participation in the retirement system. Each year, the City Council adopts a resolution establishing the annual tax rate on the property for the payment of this voter-approved obligation. Only 24 of the 482 cities in California have access to this property tax override. In 2002, a court case in the city of Huntington Beach limited costs covered by the public safety property tax to the pension benefits in effect when Proposition 13 became effective July 1st of 1978. Further, the rate has been capped at the rate that was in effect in 1983-84. Therefore, the rate cannot exceed 0.076637 per $100 of assessed value. The city engaged Foster & Foster to complete an actuarial analysis and estimate for the eligible CalPERS cost for fiscal year 23-24. It was determined that there is about 147 fire positions and 240 police positions with a total estimated retirement cost of $26.2 million. This next slide shows the calculation of the rate. Beginning with the second line of the table, the estimated eligible CalPERS retirement costs to be recovered from the property tax rate is $17.5 million, less the fund balance from previous years of $2.9 million. This equals $14.6 million. There is also a subtraction of revenue from unitary properties of $2.8 million, leaving $11.8 million that will need to be recovered through the property tax. To calculate the rate, you take the $11.8 million divided by the $25.7 billion. Then the rate is applied per $100 of assessed value. A few notes for further explanation. The unitary property is property owned by railroads and utilities taxed at the state level and allocated back to cities. We began receiving this revenue in fiscal year 2021. Our current proposed tax rate is higher than it was as compared to last year's tax rate, which was 0.029095 per $100 of assessed valuation. The reason for the large increase is because the last year's rate was much lower due to a one-time adjustment related to the inclusion of unitary properties. Without the one-time adjustment, last year's rate would have been approximately 0.049286 per $100 of assessed values, which is commensurate with the proposed fiscal year 23-24 rate of 0.045750 per $100 of assessed value. As mentioned earlier, the rate is capped at 0.076637. The proposed rate for 23-24 is far below the capped rate, and the proposed rate is 12.2% lower than the average rate over the 5-year period. This concludes the presentation, and this is the recommendation slide. Thank you for taking the time to review this presentation, and staff will be available at the meetings to address any further questions. Thank you.